Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Paul Schroeder, QQQ Equity Product Strategist at Invesco, to discuss what has driven the outperformance in the Qs in March, as well as technical levels to watch. Paul, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me, Jill.
You got it. How has QQQ performed so far this March?
Yeah, so I think to the delight and perhaps surprise to the many QQQ shareholders, QQQ has performed rather well here in March. Similar to what we saw in the back half of 2020, the mega cap growth names within QQQ that are the heavyweights really have been the place that investors have turned as we've seen the turmoil really turn up here this week. So far in March through yesterday's close, QQQ was up about 4.5%. It outperformed the S&P 500 by about 4.6% just for the month of March, and year to date, it's outperforming the S&P 500 by about 11.5%. So far this year, QQQ, we've seen it up over 15% on the year. And really what's been contributing strongly to the performance of QQQ overall, like I mentioned, these mega cap growth names concentrated within IT, along with communication services, have really been the primary driver of the return. We also have seen healthcare and consumer staples exposure within QQQ help out that performance.
And outside of sector exposures, what has been driving the performance, and why have we seen such resilience from the Qs?
Sure. So as I mentioned, largest contributor outside of IT really has been its lack of exposure to financials. As you know, Jill, QQQ's parent index, the Nasdaq 100, is comprised of the 100 largest companies listed on the Nasdaq Stock Exchange, ex financials. So that's obviously the key part here, having zero exposure to the regional banks and other financial institutions that have had issues bubble to the surface here this week. We've also seen a massive shift in expectations as to what future Fed policy is going to be. With them meeting next week, we'll obviously have a little bit more clarity, we hope, as to where they're going to be going from here for the remainder of the year. But we've seen expectations for the Fed shift dramatically just over the last week, where there were zero rate cuts priced in just a week ago to now rate cuts priced in the second half. We've also seen the 10-year Treasury drop significantly, where a week ago it was trading closer to 4%. Now it's underneath 3.5%. So investors really took the time with these 2 points within the fixed income market to focus more on growth-oriented stocks. What we've also seen is some strong performance from key companies within QQQ. For example, Meta announced another round of layoffs here this week. While people don't necessarily like to hear jobs being lost, investors took this as an opportunity to move into the stock as a sign that cost-cutting measures are in place. We've also seen NVIDIA perform extremely well, coming off a strong earnings announcement at the end of February, along with stating how integral AI has been to their business going forward. So both of those companies are up over 70% for the year through yesterday's close.
And Paul, looking at the technicals, what are price levels that you're watching?
Yeah, so this is a common question that we're getting from our clients here, since everything seems to be moving so quickly in the market currently. What a lot of investors don't realize is that QQQ has been trading in a range pretty much since the summer of last year. The bottom of it being around $260 a share, the top of it being around $313 a share. We're obviously trading closer to the higher end of that right now, which is the current resistance level. A break above that level of 313 would be fantastic. I think a lot of investors would love to see that. But I think the question that we're getting more is, if we were to see things turn back down, because obviously there's a lot of unknowns in the market with everything that's going on, volatility is probably going to remain in the market for the remainder of the year. What are the key levels that I should be looking at here over the short term? So holding that $300 level is extremely important in order for this bull trend to continue that we've seen so far in 2023. But beneath that, we've seen support amongst the moving averages, specifically the 100-day moving average, along with the 200-day moving average, which are around $290 and $285 a share. So as always, like we've mentioned, like we've talked about through our chats, Jill, this year it's going to remain volatile. We like what we've seen so far this year, but investors need to remain focused on their own risk tolerance and time horizon as we navigate this market.
All right. Appreciate the insight as always, Paul. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.